So just because the interest rate is going up, it doesn't mean some of these companies will stop innovating. Innovation does not stop because of interest rates are going up. And now you're probably thinking, why is the interest rate zooming up really fast? Hey, what is up you guys? Welcome back to the channel. My name is Imon here at Money Host. Today we're going to talk about the state of the market. The NASDAQ has been selling off crazy, it's getting hammered. What am I doing? Coming up. Today, the NASDAQ got hit really bad again, especially all the growth stocks. So what is going on is that the interest rate, the 10-year bond yield is increasing. Currently it's above like 1.6 or something. So just because the interest rate is going up, it doesn't mean some of these companies will stop innovating. Innovation does not stop because of interest rates are going up. And now you're probably thinking, why is the interest rate zooming up really fast? Usually they would have auctions for the 10-year notes that US government is selling. So whenever they have these 10-year bonds, what would happen is that you would have a lot of people showing up to buy these bonds, and they would buy it to generate income, whether it's 1% or 1.5%, however, whatever is the percentage. So they would get a monthly coupon, monthly payment, or 1% interest payment. Because when they have this auction to sell these bonds, you have a lot less and less people showing up. So when you have less people showing up, that means there's a less demand for these bonds. So when the demand is low, obviously the rate goes up. That's just what is happening. And just because the interest rate is going up, it doesn't mean some of these companies, your favorite Apple or your Tesla or your PayPal, would stop innovating tomorrow because the rate is up. Prior to pandemic or the COVID, bond yield rate for 10 years was above 2.0 anyway. So what is different this time? In the past, for the last couple of months or last several months, anytime the bond was auctioning off, there would be more buyer to buy the bonds as a form of income for those people. And then you would have the Federal Reserve who would buy the bonds at a much lower rate. So when you have like Jerome Powell with his big bazooka showing up to buy these 10 years bond at a lower rate, so which would force the rate to stay down. But this time he hasn't mentioned anything. You have less buyers showing up to buy these bonds, and he hasn't mentioned that if he or the Federal Reserve would step in and buy some of those 10 years bond. That is causing the sell-off in the NASDAQ. Especially all the growth companies thrive in a lower rate environment. They can almost borrow money for like next to nothing, almost for free, and keep investing and thrive and grow as a company. So with the interest rate going up, these companies are likely to borrow as much as they have been. So a lot of companies or a lot of people are predicting that it would slow down the growth of some of these growth organizations or growth companies and growth stocks. Therefore, a lot of people are actually selling off these growth stocks such as Tesla, Apple, basically anything within the NASDAQ space is considered as a growth. So they're selling these off to buy like stocks like oil and gas, shopping malls. Seriously, when was the shopping malls and oil and gas companies were innovating anything? So we all know the world is changing at a much faster rate than we have been. The world is going to change more in next 10 years than it has in last 100 years. From the way we shop online, to how we buy our houses on Zillow, to how we see our doctors using teledoc. So we need to keep inventing and keep innovating over next 10 years if we are going to change more in next 10 years than we have in over 100 years. So for that, you need all these growth companies to continue to invest and thrive. Yes, with the interest rate going up, it may be more expensive for some of these companies to borrow money. Companies that are expanding, they have been borrowing heavily, and they probably already have enough runway for the next several years. Especially someone like Tesla, they already have enough runway for next several years. I don't think they're in a position where they need to borrow money. So why are these tech stocks or NASDAQ been selling off? People are rotating their money because of inflation, because of the higher rate. People are actually selling these NASDAQ stocks to go to like oil and gas companies to or so-called reopening stocks that they're buying. These are very same people that jumped into these tech companies a couple of months ago or 6-7 months ago. Now they're like actually selling their tech stocks to move into these so-called reopening stocks. But with the next couple of months, I have a feeling like next 3 to 4, 5, 6 months, they're going to be dumping those stocks and coming back to the NASDAQ or even the tech stocks again for the growth. Obviously, when was the last time we had a reopening company, let's say a mall or bank or like oil and gas company innovating anything? Like, are they pumping oil differently than they did like 20 years ago? Is the bank, like if you go walk into any of the large banks, are the teller greeting you different way than they did like 10 years ago? I don't think none of these companies that they're going into is innovating anything. So in order for the world and us, the US or the US economy and the rest of the world to continue to innovate and change, you need some of these tech companies to continue to invest and thrive. And just because the interest rate is going up, it doesn't mean they will stop innovating. It doesn't mean that they're gonna go out of business. They'll continue to thrive. They'll continue to do well. Yes, they'll be just borrowing money at a higher rate than they have been. That's all that means. The world is not ending. All the companies that I currently own are like super hyper growth stocks and they have been hammered. But I personally, I'm not panic selling anything. I don't have a plan to sell anything at all. I am not adjusting my portfolio based on just what is going on, that other people are being dumb and selling, panic selling things. I plan to continue to hold. I think if anything, this is creating a great opportunity. If you're someone who have at least 5+ years to invest or at least 5+ years of runway time horizon, I think this is a great opportunity for you to add any of those positions, whatever position that you currently have. I think this is a gift for a lot of people that have money or sitting on cash that they can deploy. So I really hope I was able to explain why the market is acting all crazy and market is going all over the place. I think this is not something that people should be scared and panic sell everything. You should not be liquidating your portfolio just because the interest rate going up and some people are panicking.
Clearly you are feeling a fresh round of pain right now. What is your strategy? What are you buying? What are you selling?
So I'm happy that the market is broadening out. This was the case in late 16 as well. Value took off and left growth behind. And whenever I see that happen, I say, okay, this bull market has broadened out. This is good news. What we do during these periods is concentrate our portfolios towards our highest conviction names.
No one ever wins by panic selling, because when you are panic selling, you're basically locking in these losses. Currently, I have a couple of things on my portfolio that are red, but these are paper loss. I'm not locking in those loss. If I sell it right now, I would be locking in those loss. But as long as I don't sell it, I hold on to it. When 6 months from now, these companies are green again, it would be green again. I'm not going to be lost again. So I'm not going to even remember that in March or even February, my portfolio were red. So by selling now, you're actually locking in, realizing this loss. You shouldn't be doing that if you are a young millennial who has time horizon. If you're not retiring tomorrow, if you're not retiring within the next couple of years, I don't see a reason why anyone should panic sell these. But then, if you're someone who needs the money very soon, it probably makes sense that you want to sell or you need the money for something more important. But in those cases, you shouldn't be investing money that you need like within the next couple of years. Unless you're investing for like at least 5+ years, you shouldn't be investing in these kind of growth companies. And if you're investing in these kind of growth companies, this is just a very normal and typical for these companies to go through these kind of ups and downs. Stock market never goes up in one way. It's always like, goes up and down. It's not like a one-way street. There are going to be red days, green days, there are going to be a red month, there's going to be green month. It's just the norm. So for that, you just need to hold on to your stocks and be patient and just continue living your day. Maybe maybe it's worth not checking your portfolio and just ignoring. I'm someone, I check the market very often. Like I would check the CNBC or go to Google Finance just to see where the market is, but I don't really open my own portfolio. Like I use Charles Schwab. I'm not gonna open Charles Schwab, be like, oh yeah, I'm down like 3%. Oh yeah, I'm down like 2%. Because I think these things can have a lot of psychological effect. Like you could be making emotional decisions just by certain things that, like when people see things that are red, people are emotional. Like people can make certain adjustment to their portfolio just because something is red, because red is usually associated with being like a danger. That's why. And then when things are green, you feel great, like your great days. For all those things, I usually don't open my portfolio on the red day, especially when I know that, because I don't want to be making emotional decision just because somebody else is selling their stock off, which is causing the market on a whole to be downtrending. With that in mind, I really hope that it gave some perspective to you guys, and I was able to explain why the market is red and why this is not something to be panicked and why you shouldn't be panic selling. The world is not ending. We will be there tomorrow. US will be reopening. The sun will shine. There's no reason to panic. With that in mind, I just want to mention one last thing, that this is not a financial advice. Do not trade based on what I say. I am just sharing my experience for educational and entertainment purpose only. So do not trade based on what I say. I'm just a guy on the internet. So with that in mind, I really hope you guys learned something new, and thank you for watching, and I'll see you on the next one.